Welcome to today's fireside chat. We've got our trusted partner, Richie, to join us today for the very purpose of, as a mortgage broker, giving us an insight into what's happening with the lending and lending environment as of today. So welcome, Richie, and thank you for joining us.
Yeah, thanks for having me. Thanks, Brendan. Thanks, Simon.
What's happening? What are you seeing as trends and perspectives towards lending at the moment?
Yeah, from an owner-occupied point of view, it's pretty much been the same. You've got a lot of people wanting to upgrade or first home buyers looking to get into the market. The government's 5% deposit scheme has definitely helped first home buyers. It's also increased prices as well. I mean, it depends on the state, but
So you've said owner occupiers are pretty much the same as they were, yeah?
yeah.
Now, are they? Because if first home buyers are a little more active, are you finding the upgraders and the people who are willing to spend the post 2 million, post 1.5 million, are they as frequent as they were, or are they a little less frequent than they were?
No, it's the same. It's the same.
That's brilliant.
Yeah, the thresholds. The government's removed the income thresholds for this scheme. They've also increased the property price thresholds. Like, say, for Melbourne, we're looking at $900,000 threshold.
For first home buyers?
Correct. Yeah, the upgraders are generally higher than that. Yeah, but for first home buyers, what they're buying for now is higher than, say, this time last year.
So you finding the same volume of first home buyers around as there were? Because the statistics suggesting that there was a massive spike in first home buyer activity late last year, but it started to edge off. Is that what you're seeing?
I'm still seeing a big spike now. I'm getting a lot. Yeah.
Awesome.
Yeah.
So the upshot then for people who are developing, cater to the first home buyer market, cater to the sub cap market, and the competition is still strong.
It is still strong. So where I actually have seen a downturn is for the investor market. So what I think that is largely due to is all the noise that's going to in relation to next month's budget. So I think investors are holding off to hear what the outcome is for that. But then also you've had not just for investors but other people as well. You've got the recent rate rises. You've got cost of living pressures. So there's a mix, but I would think predominantly for investors, they're hanging to see what the outcome is of next month's budget. Yeah,
we saw a similar event leading into 2018, 2019 election, where the investor market cooled, wondering what was going to happen in the election. Now, while this is not a federal election year, you're right, there's a particularly tumultuous period in global economic environments and local economic environments, and the budget will have a big impact. So I can see how a lot of investors, now you're talking about the buy and hold investors specifically, I suspect, yes, not so much those who are doing active projects.
Yeah, correct.
So you're saying then that those guys are a little nervous to get into the market at the moment. And are you seeing that across the country they're edging off a bit?
Yes, definitely. Yeah, definitely. Yeah.
Melbourne and Sydney broadly are going relatively flat. Actually, they're both in decline at the moment.
Yeah, I agree with that.
But not significant, not a case of panic. No, it's just a steady. And there are some opportunities to be able to negotiate really well in these markets right now. All right, tell me what you're seeing around active investors, those people who are buying for shorter term, like a couple of years, or renos shorter than that, projects. You seeing that activity still much the same?
That's lessened as well. Yeah. For me, the whole investor market's reduced. I wouldn't say significantly, but it's reduced. It's just, I think it's just due to the uncertainty. So I think once the budget is released, I think there should be some more. Well, it depends on the outcome, but I think that you'll see an uptake in inquiries. But at the moment, the opportunities or the inquiries come through are less. Yeah.
So relative to the budget, what's the big fear that you think investors are seeing in there that's going to concern them most?
It'd be the negative gearing. So whether they're going to cap that potentially to 3 properties or 2 properties. There's talk about the capping, but there's also the capital gains as well, which mainly applies to the people who want to hold. Yeah, so are they gonna reduce that capital gains discount from 50 down to 25 or nothing? That's actually significant as well. So that's what they're waiting for.
Have you heard about the idea of grandfathering versus not grandfathering? Because I heard a whisper to suggest that they wouldn't grandfather those who are already on negative, but they'd give people time to sell their properties at the 50% before it converted to a lesser rate. Is that what you're hearing too?
Yes, definitely. Yep. Yeah. Whether it be 5 or 10 years, you've got 5 or 10 years to sell your property. I am hearing that grandfathering is a really serious consideration for the government. Yeah. Yeah. Yeah.
Simon, I'm throwing to you now. Other policy decisions that you think are getting in the way?
The obvious one in
Yeah.
my mind that's probably impacted people recently, was the interest rate increases that we've had and how that's flowing through into servicing calculations and how much people can borrow. Richie, are you seeing any increase in the volume of applications that are being knocked back, or how are you seeing that increase in interest rates flowing through into how people are borrowing, how much people are borrowing, what's getting approved?
As a general rule, if it goes up by 0.25, your borrowing capacity reduces by about 5%. So I wouldn't say there's been a reduction in inquiries. It's just people are lowering their expectations. So yeah, if they can't actually get what they wanted, like maybe this time last year. But yeah, generally, people are still interested in buying investment properties. It's just that they're lowering their expectations. They've had to.
Order of magnitude on that, how big a difference do you think the recent rate increases have made to people's borrowing capacity? Like if you could put a dollar figure for the average person borrowing at the moment, now at higher rates, what impact's that had on their limit?
Yeah, I'd say 5%. So if you wanted to borrow, say, $1 million, yeah, you're now going to be able to borrow 950, about 5% each time. So we've had two recently, so it comes down a fair bit, yeah, as the rates go up. Yeah.
So, Richie, here's a different question then along the same vein. Are you finding investors willing to just simply drop their purchase prices by 50 grand or by whatever percentage points and still actively go and buy? They'll just buy something cheaper?
Yep, definitely. Yeah.
So then what you're saying then is they're not driven by, I want a house in an area, I want, I'm after this particular pocket and bugger it, I can't find it, I'm going to have to figure out what I'm going to do now. You're saying it doesn't really matter to them as long as they are investing, they're putting money into property.
Correct. Yeah. Yeah.
Yeah, cool. So it's not necessarily driven by the price. It's driven predominantly by the activity, the ability to.
Yes,
So
correct.
what you're saying then for investors who are keen and out there into a buy and hold space, an interest rate doesn't really affect them by way of desire to want to buy, other than maybe forecast growth in their own heads. It just affects what they buy.
Yeah, correct. Yeah. And everyone's in the same boat. For those that require lending, like if the next person they require lending, their borrow capacity is likely going to be reduced as well. So it affects everyone. Yeah.
So given rates have gone up, what are typical lending rates for, say, investors versus owner occupiers?
Say investments at 80%, generally 6.29. You might have some non-banks starting at say 6.19, but generally the mainstream you'll start at about 6.29. That's an 80% LVR interest only. Now, for those that want principal and interest, probably 6.04 for the mainstream lenders. I don't get many investors who want principal and interest, but say about 6.04. Now, if you've got a lower LVR, say 70% or below, I'd probably say you've knocked 0.1% off that. So now, if for owner occupiers, it really, yeah, your rate shouldn't have a 6 in front of it. It should be at least 5.84, 5.89, maybe 5.94, but definitely shouldn't have a 6 in front of it if it's an owner occupied rate.
Sure. What about fixed versus variable? What are the trade-offs there?
Yeah, not seeing very many fixed, whether it's investment or interest only. But I'd probably, for the ones that I'm doing, actually ANZ 1 year fixed, that's 6.44. So that's an 80% LVR interest only. So that's it's about 0.13 higher than the variable interest only. I'm not seeing much of it. The ones that I am seeing is generally 1 to 2. Most people are thinking that, yes, we might get 1 or 2 rate rises this year, but everyone's sort of expecting rates to go down again. So they're sticking with variable, but I do get the occasional fixed rate. Yeah.
It's an interesting perspective. You're suggesting that people are expecting rates to go up for a period, but right back down again shortly after that.
Correct. Yeah.
So this, in your mind, is a potentially temporary glitch in the interest rate rise to manage a short-term problem.
Yes, that's right. Yeah.
Well, that's exciting.
I hope so too.
Well, yeah, certain amount of don't we all? Yeah, okay, so that's very cool. So, where are you getting that information from? What in your mind is the trigger to have you go? It's going to come back down.
Just speaking to lenders. Like I do go to some forums that the lenders offer. Just it's what their economists say. So it's generally from them. I watch the news as well, but generally the lenders' economists.
Simon and I have a running joke around lending economists, suggesting that they're never right. Let's hope that they are.
Yeah.
Well, even a broken clock's right twice a day, isn't it, Brendan?
Yeah.
Let's hope it chooses this hour. Very good. All right, Simon.
Yes. Lending timeframes. So application to approval, what should you expect at the moment?
If you're borrowing in personal names, they're not too bad. Acceptance finance is quite lucky. We've got some favourable service level agreements with some lenders. So realistically, I'll be reluctant to apply to a lender that can't approve your loan within 5 business days.
Wow,
Now,
that's good.
I'm not quite sure whether you wanted to touch on trust and company lendings later on as well, but they're the ones.
Yeah, let's do that.
Quite slow. They're the ones, regardless of lender, they're slow. Not only have a lot of the mainstreams stopped or made it difficult for applicants, for company and trust applicants, but their timeframes are slow. So if you wanted to borrow under a company or trust, I'd allow a 3-week finance clause if you wanted one. If you didn't have that pre-approval, could probably get it done in about 10 business days, though, depending on the lender. But it is longer, definitely longer than personal borrowing. Yeah.
Good to know. On that, we have a question. Rashika asks about lending or any changes to lending recently with respect to investing under an SMSF.
Yep.
What are lenders lending to? What might be the best way to structure a purchase to stay compliant and keep access to funding or lending? What are the realistic timeframes if you're doing something under an SMSF? Is that something that you're across, Richie, at all?
Oh, definitely. I do a lot of mainly residential self-managed super fund purchases, but again, I'd probably First Mac would be my go-to for self-managed super fund lending. Now they'll approve an application within that within 5 business days. Now, if I'm with First Mac, their serviceability is within the fund, so it's your super contributions. It's the rental income coming in. Now, if it doesn't service within the fund, I'd have to go to another lender other than First Mac, such as you've got your La Trobe or Think Tank or Bluestone Home Loans, where you can actually look at income outside of the fund. And those lenders are a bit slower, so I'd probably say maybe 6 to 7 business days. But it's still relatively quick.
So the broad appetite for lending right now is still fairly strong. There's no major restrictions. There's no anxieties on the horizon going, oh, caution about these ones.
No, a lot of the lenders have been using comprehensive credit reporting to have a look at your conduct. A lot of non-banks now are using comprehensive credit reporting, whereas in the past you had to provide bank statements for everything, but they're using comprehensive credit reporting. So in that sense, it's a bit easier from a documentation point of view, but then you can't actually hide late repayments, which then it might make it difficult. For example, Macquarie, probably about 3 months ago, if you've got a 2 on your credit file, a 2, which means 2 months late, then that's an automatic decline. So, I mean, I'll always do a credit check before an application. So if I saw that, they wouldn't be in the mix. But even if it's a 1 with Macquarie, it's you got to make or provide a good excuse for them to accept it. So a lot of banks aren't that harsh. So long as you've got the late repayments are more than 12 months ago, then they're fine. But the lenders and non-banks now are using comprehensive credit reporting. Yeah.
So I guess the advice there is to not be late on your credit card payments and your bills. Make sure that you're up to date to keep your credit rating as clean as possible, make it as easy as possible, yeah?
Yeah, and that's exactly right. And I let my clients know that as well. But what I also wanted to let everyone know is because your credit score or credit report is important. Well, legally, any financial lender has to do one when you apply. I'm getting a lot of, it must be just due to the cost of living at the moment, but I'm getting a lot of, seeing a lot of credit reports with low scores. Now that's due to just any application, whether it be a personal loan. So you've got your GE Harvey Norman credit cards, or even if you're turning over a lot of credit cards to get points, it dramatically reduces your credit score. So yeah, if you are just trying to get points and switching credit cards all the time, maybe do it after you buy the property because it does impact your credit score.
If you did a credit card change for a point hunt 2 years ago, would it make a difference now, or are you talking in the last 6 months?
I'm talking within the last 6 months. Yeah.
Within the last 6 months. Okay, great. So if it works out that you've gone, woohoo, Virgin's offering a whole pile of points right now, let's sacrifice our ANZ and go for a Virgin credit card and then get our free flight. If you're doing that, great. Don't buy a house for 6 months. It'd be probably the message.
Quick thoughts on if someone's looking to buy a property and take out a loan, say in the next 2-3 months, what should they be getting together now? How can they get ahead of the game, make it as easy as possible for themselves?
See your broker, get that credit check done because that's important. Get an assessment done in terms of your borrowing capacity. And I would also suggest get pre-approval as well. It's always handy to have pre-approval. In saying that, a lot of lenders now, just due to cost cutting, are simplifying their pre-approvals. So a lot of your clients might have heard say light touch pre-approval, which means they're not getting fully assessed. So that's important. If there's a bit of complexity with your financial situation, then I'd get a fully assessed pre-approval. But yeah, I'd always just say be prepared. Like it could be that you do have to wait 3 or 4 months to increase your deposit, or it could be to utilize other income such as bonus or commissions. But there's always if you see a broker early, you'll be able to plan ahead quite easily.
And presumably you have your tax returns and everything up to date right now too, yeah?
Correct. Yeah, that's right. Yeah, ANZ and the Westpac Group, you can still use 2024 tax returns to the middle of May. But pretty much everyone's now using 2025 tax returns.
Yeah, so the clock's running out.
Correct.
Very good.
Is tax up to date? Richie, how do people reach you if they want to talk to you? Yeah, as a trusted partner, how can people access your information or speak to you about their lending requirements?
Yeah, thanks for that. My email is Richie, so it's RICHIE at acceptancefinance, all one word, .com.au. Or alternatively, just feel free to call me anytime. My mobile is 0418 502 809.
For all those people who are new, please make sure you fill out your profiles. The greatest information and contribution you can make to yourself in this community is make sure your profile is fully occupied or fully populated. It gives people access to information for you, gives you the ability to access others and build the network, your network in your community. Richie, thank you ever so much for joining us today. It's very generous for you to offer your time to us, and we appreciate that greatly. And thank you for being such a reliable, trusted partner for all the years that you've been able to support us. Thank you. And this broader community, of course. Simon, awesome job. Well done. We wish you all the very, very best for your next 7 days, and we will see you again at the next Fireside Chat, Property Pulse, in 7 days' time. Thanks, guys. See you.
Thank you. Bye.
See you, everyone.